Good afternoon. This is Tom Alexander. It is Sunday, May 22nd. We're going to start with the weekly view. I think the weekly view is really the most informative view at this point in time. I mentioned a couple of weeks ago that if we took out certain levels, and you can go back and you can review that report, and the reports are previous reports are linked to the are linked in the current report. But I said at that point in time that if we took out certain levels and we've taken those levels out, that I didn't know where the market was going to stop, and that neither did anyone else. And that's certainly the case. It continues to be the case. Now, there are some signs that we may have formed a bottom. But if we haven't, I think that we are in a crash mode. I'm not being an alarmist. I'm just sharing with you my opinions based on experience over the past 38 years. We're getting super compressed to the downside. I think we've been down, the S&P has been down now 7 consecutive weeks. That's unusual. It has only happened a few times, always in bear markets in the past. These are the weekly charts. Now, the levels that you see on this chart, I don't have downside levels because there's really not much that you can objectively hang your hat on below these levels. And I don't use magic numbers. I use simple price action and previous trade activity on the horizontal scale. That's an auction market concept. But to the upside, we do have very good levels. And basically, the upside levels in each of the indices will be last week's. Let me show my screen here, which I'm not doing. Here we go. Okay, so you can see the weekly charts here. The levels to the upside are the important levels. To the downside, it's a guess. Below Friday's lows in the indices, you're in an elevator shaft. I have no clue what happens if we take out Friday's lows, but you want to be very cautious about making assumptions that the market is going to bounce within 10 handles of Friday's lows. That's no way to trade. If we do rally and we do close on any day above last week's session highs, I think that's bullish, and I think there will be follow through. All right, let's look at the cash charts. And here is the cash view. Now, the bullish case here lies with the fact that the Russell is acting really well relative to the other indices. So that's a divergence. Now, we have had similar divergences. Last week, we had a divergence in the Dow where the Dow did not trade to a lower low. So it's sort of this seesawing back and forth. But typically, at important market turns, you will see a divergence of this type. Now, the caveat is always that divergences can be resolved bearishly also in this particular instance, since we're looking at divergences forming a potential low. So if next week we have some sort of mini crash, you're going to see the Russell below its recent low. You're certainly going to see it below Friday's low. Okay. Let's see. Let's look at the profile view. And this is the profile view. Now, this is basically a quarterly. Each profile unit is 1 quarter. I have split out the current quarter into its view, into its slots. Each letter represents 1 week of trade. There are a couple of things to notice here. First of all, the migration value is lower. That's very clear. Last quarter's high volume node was lower than the previous quarter's high volume node. The high volume node so far for this quarter is lower than last quarter's. This is where we're trading right now. Now, this is a guess using the profile graph and market structure. If we do crash lower, you're probably going to see you probably see 36.58 taken out, frankly. But we'll see. I put a schematic in the report this weekend that shows 2 potential outcomes. One would be that we have a low in place and we trade Eventually, we trade back up into close to 4,300, maybe form balance in there. The other scenario is that we don't go much higher than our close that we saw on Friday, but we do go lower. And at that point, then I think what you'll see is a more protracted time-wise balance area form. Okay, let's look at the technical view. Here's the technical view. Now, we have been down, or we have seen 7 closes since the March 29th high, 7 closes with breadth negative 2,000 or lower. This is what these arrows indicate. And in that period of time, we're down not quite 18%. Now, to compare this, just for fun, in the February to March 2020 decline, there were 7 declines, 1, 2, 3, 4, 5, 6, 7. And then we had 2, you had a total of 9 in this decline. Well, we were already at 7. Well, the 7th reading here from the top in February to the low that occurred on this was the 7th reading, and this was in mid-March, we were down 27%. Just to give you an idea of scale. So we can be down a whole lot more than we are. Just because we're down 7 consecutive closes off this high doesn't mean we won't be down 9, 10, or 11, or 12. However, it is a heads up. And it is more evidence of how compressed this market is. And the more compressed it gets, the more likely it is to release that compression one way or the other. And that's going to be in this just torrid rally or this dramatic washout decline. And I think we'll see one or the other next week. I've been saying that for a couple of weeks, but eventually I'll be right? I mean, that's how everybody else does this, the stop clock theory. I'm only partially kidding. The 10-day moving average of NYSE advancing issues also is cautiously, I will add, on the bullish side of the ledger, because it continues to diverge against price lows in several degrees of time. This longer view, it made a low back here actually in January, and since then we've gone lower several times, and the 10-day moving average has not exceeded that low. We've had divergences. We have another divergence. We have a divergence within a divergence. I can go on and on and on. So this is why I think that we are close to a resolution price-wise to some sort of very, very significant move. I don't know if it's going to be up. I don't know if it's going to be down. I make that determination. I do fine tune this for those of you that are members. We have a live trade room, and every single morning following the Globex session, then I reassess the information that I'm giving, for instance, in this report, in case you're interested. I hope you found this helpful. If you did, please like it. If you would like to receive notifications as soon as I post something on YouTube, hit the notification bell. Thank you. Enjoy the rest of your weekend. It's going to be a fun week coming up.